Duncan, one of the key things around data center financing, obviously, is the cost attached to it. And I know there are some estimates saying that a staggering like $3 trillion is going to be required for financing data centers by 2029. Why is the demand so huge, and what's driving it right now?
Thanks, Chef. Yes, it really is quite astonishing the amount of financing requirement that we're seeing. And it's really coming from the exponentially increasing development and use of artificial intelligence, particularly generative AI, by more and more actors, including the big tech firms in the US, but also elsewhere in China, India, Southeast Asia, and the Middle East. And this has created an unprecedented demand for data storage and processing capacity as these AI developers, the hyperscalers, fiercely compete with each other, including in different languages and cultures, each of which, of course, wants to become the dominant player in their market.
Yeah, yeah, understandably so. Um, and then how is the financing of data centers different from the financing that we know for sort of other types of infrastructure?
Yes, it's really been quite interesting to see how data center financing is evolving. And we've actually seen quite different types of financing being used for data centers, including project finance and asset finance, as well as balance sheet financing by the big tech firms. But also importantly, we're seeing increasing participation from private equity and private debt funds, as well as the conventional banking syndicates and infrastructure investment vehicles. And really, each financing approach we're seeing is quite specific to a particular type of data center. So, for example, asset financing needs to accommodate the periodic replacement of the graphics processing units, the GPUs, and project financing very often encompasses the renewable energy and sustainable water supply that are required for data center development and for operation.
Yeah, yeah, that's a really good point. And I think it's one of the things that people don't necessarily appreciate is the fact that data centers require enormous power and water resources. So, how big a challenge is resource availability when it comes to structuring financing?
Yes, in practice, these huge resource requirements are actually key drivers behind the underlying development project and their financing. And what further increases this challenge is that many, if not most, of the key players in artificial intelligence have really quite ambitious ESG and sustainability targets, which necessitates, among other things, the requirement for renewable energy and a kind of do no harm requirement relating to, for example, the sustainable sourcing of water and also the impact on local communities and environments where these data centers are located. And for many financier constituencies, whether it's investors or indeed banks and private equity and private debt providers, high ESG and sustainability standards are really non negotiable. Thus, it's become in practice de rigueur, particularly in Europe, to have these high standards. Another important consideration in this regard is what happens at the end of a data center's life with respect to decommissioning and the remediation of sites. And that, of course, is another source of cost and risk. So, from a financing perspective, it does increase the number of parties in a transaction and or the overall scope of the development projects themselves. And consequently, all else equal, the risks relating to future revenues and cash flows, of course, increase. So, this is one of the reasons that we've seen very significant participation by private markets, private equity, and private debt in data center financing. These are actually really quite risky and complex transactions, but nonetheless have the potential to deliver very strong returns to investors over longer time periods. And so, if the underlying development project and its financing can be optimally structured, then it is attractive to these cohorts of investors that have a higher risk appetite.
And Duncan, what is it that makes the GPUs, the graphics processing units, such a central cost driver in these type of projects?
Yes, it's an interesting phenomenon relating to data centers. So the GPUs, or as you say, the graphics processing units, are very often the largest element of the overall cost of a data center. But also in reality, there's a pretty high likelihood actually that over the entire life cycle of a data center, for example, 15 to 20 years, which would be the kind of basis for the financing, the original GPUs may well need to be swapped out as they become, of course, obsolescent with the advance of technology. And this, of course, requires further capex for the project. So over the life of a data center, the GPU element often dwarfs most of the other costs of the project. And really, this complexity of data center financing really makes the role of the financial model, which of course sits at the heart of these transactions, really absolutely critical. And it really forms the basis for both the banking case and the capital structure that we would see for a data center, special purpose vehicle, or entity, and also for the scenario and stress testing that would need to be carried out for risk management purposes.
And I mean, obviously, it's a kind of it's a burgeoning industry, right? But I'm just wondering, who are the key players in the data center ecosystem currently? And I'm guessing, how do their interests sort of differ from each other?
Yes, we've got a large number of parties generally involved in these transactions, and increasingly we're seeing specialist data center developers and construction firms coming into this space. In addition to the big tech firms, the hyperscalers, the big artificial intelligence companies. So we're seeing a number of different players now, and also, we've got other types of user coming in, perhaps smaller types of users into the market. We've got specialist data center platform providers. And of course, we've got the GPU manufacturers as well as the GPU infrastructure providers. So a lot of different parties coming in to these transactions. And as you say, Jeff, really with quite different interests. So, where you've got longer term investors, of course, they're looking for robustness of revenues and cash flows over the longer term. For your GPU manufacturers, of course, they're looking to make margin on what is essentially a production type business. So the business models do vary. And so what we see when we come to our business models, we see that actually these interests really need to be brought together in an optimal way so that investors, banks, and all of the real economy providers of products and services can, of course, get the right risk return profile. But again, in many cases, it's a bit like a standard project finance transaction that in practice, all of these parties, of course, must work closely together to ensure that the construction, installation, operation, and maintenance of the data centers are all carried out to a very high standard. And of course, particularly for investors and banks, this is to assure the continued operation of the facilities and ultimately the generation of revenues and cash flows.
Oh, perfect. And I guess another key point is, we've seen a number of data center disasters over the years, right? What are the lessons that have been learned from these incidents? And I guess, what are the implications for data center financing going forward?
Yes, we've had outages across many data center subsectors, including Amazon Web Services, Microsoft Azure, and also the captive models, including British Airways and Delta Airlines. This, of course, is extremely problematical for financiers since it both reduces net income And also, in the case of physical damage from fires and flooding, which we have seen on occasion, impacts the value of the assets themselves. So, what we're really seeing now is an evolution to a much more professional approach, particularly in operational management, but also in the design of data centers in order to minimize these risks. At the margin, I think there's a greater propensity to acquire services from specialist providers rather than trying to develop and operate in house.
Yeah, that makes sense. And with such high demand, do you see data center financing becoming more standardized or staying as it is currently, which is sort of highly bespoke?
Yes, it really is quite interesting now that we're actually seeing the market becoming increasingly bifurcated. On one hand, we've got the hyperscalers, the big AI firms, increasing their demand for bespoke, the types of build to suit facilities. And this is due to the advances in artificial intelligence and the development of their own business models. But we're also seeing more and more smaller players coming into the market. And consequently, the demand for generic services is also increasing.
Oh, brilliant. Well, I know I'm just being mindful of time, Duncan. I mean, this is the huge topic that we could talk about for all day long, I'm guessing, right? But I guess to sort of top off the session that we've had, if you were advising a new investor entering this sector today, what's the one piece of advice you'd give them?
Thanks, Jeff. Yes, I mean, one can get carried away thinking that data centers, artificial intelligence are the future. But really, from an investor perspective, the key issue really relates to the robustness of net operating income and, of course, cash flows over the investor's investment horizon. And really, consequently, the underlying revenue contracts, and of course, the parties behind those, and also the risk management provisions should be the key focus for investors.
Oh, brilliant. Excellent. Well, Duncan, thanks so much for your time. Appreciate you sharing your specialist knowledge on this topic. Obviously, if any of our viewers want to find out more about how we can support them in data center financing, they can visit thezishi.com and see the information there, or they can get in touch with us via email if you email info@thezishi.com. Duncan, thanks again. I'm sure we'll be talking a lot more about this topic going forward.
Thanks a lot, Jeff.